But one space that's been buzzing is the hospital sector. According to a May 2023 Equirus Healthcare Tracker, there is strong interest seen in the hospital space when it comes to M&A and deal activity. In terms of deal values, in the calendar year 2023 so far, investments in the hospital sector is leading the space. Sandhya J, who's the Group CFO of Narayana Health, joins us now to discuss more on this. Sandhya, thanks a lot for joining, and of course we'll talk about your business momentum as well. But first, I want to ask you, what is the reason for the sudden interest in the hospital space in India? And you folks have about 650 to 700 crores of cash lying in your books at Narayana Health. Would you be interested in participating in any of these deals?
Good morning. Thank you for having me here. I think during COVID, hospitals went through a cycle where initially there was a demand choke, and then there was an overflow, and the cash flow positions of many of the hospitals significantly improved. And we also believe that COVID kind of made people far more health conscious. India is one of the most undertreated countries in the world, where people don't come, they feel that going to go for treatment is like a bad thing. So people don't do proactive checkups. People only come for a health issue when it's really very serious. So it's a very underserved market. And during COVID, the realization on the health consciousness, the realization that you should get yourself tested, I think that also increased. So there was some good traction coming in. And because hospitals had a reasonable amount of cash flow, so they started investing. So if you see, every healthcare institution is talking about significant capex and investment. So I think that's why this sector is getting so much attention. From our point of view, we are cautious on the M&A front. The assets are fairly high priced at the moment. We are an affordable healthcare organization, and every day we strive to bring the lowest cost or the most affordable cost for our patients at the highest possible quality. So when we have to strike that balance, we have to be careful about the choices we make in terms of our capital allocation. So therefore, while we are not averse to M&A, but we will be very careful. We won't throw money at a very high-priced asset because then we'll not do justice to the patients who walk in. We won't be able to continue to give them the kind of affordable care that we are giving them today.
Okay, Sandhya, hi, morning. So let's just explore that point further. You're saying you're going to be cautious when it comes to acquisitions. Do tell us, I mean, if there's anything interesting that you see on the radar. But more importantly, you also have a capex plan of, I think, slightly above 1,100 crores for this year. So will a bulk of that be funded with the 650 crores of cash that you have? What is the plan? Where will this capex take place? And really, essentially, what is the growth in the India business that you are hoping to see and hoping to achieve this year?
Yeah. So yes, we also have sufficient headspace in our borrowing as well. So depending on how we want to deploy the cash, we will make a judicious choice between internal accruals and borrowing. Last year, it was about 40-60. We spent 40% of our capex from internal accruals, and maybe we will maintain that kind of trajectory into the current year also. As far as where we want to spend, we want to first expand in our core markets, where we have a significant brand dominance, and we also need capacity. So in Bangalore and in Calcutta, we will acquire land. In Bangalore, we already have land available. So we will expand in Bangalore and Calcutta through Greenfield. But there is also a big chunk of capex that we are allocating to throughput improvement. So one of the things in healthcare is many times we believe that if I add more beds, which means I can process more patients, but that's not completely true. There are multiple places in which the flow gets blocked. It could be diagnostics capability, it could be OT capacity, it could be cath lab capacity, it could even be lab processing time. So we are also making a significant chunk of investment in improving or debottlenecking the capacity across the organization, more cath labs, more diagnostics, etc. That's the second chunk. The third chunk of capex will go into additional capabilities. For example, we are setting up oncology across multiple of our hospitals, bone marrow capacity. So capabilities which are white spaces in hospitals, that's the third chunk where our capex will go.
So this is not going in this new entity, Narayana Health Integrated Care, where you're doing, I think, home care clinics. This capex, 1,140 crores, is not going in to set up the new entity. Is that right?
Very small amount of that 1,100 crores to start with will go into that new entity. Significant chunk will go into existing business to increase capacity and increase throughput.
Sandhya, hi, good morning. And I attest to your earlier comment about affordable care. I mean, I've been to the Children's Hospital here at Mahalakshmi, and so absolutely take that point, and it is true. So it's a strange question to ask a hospital, how do you plan to improve your margins from here after what you said? But since this is, investors, and that's something which investors are focused on. In the cost structure that you have, right? I mean, there is all kinds of things, consumables, there is, there's rental, there is, of course, cost of doctors, other manpower costs, some of the larger heads, really. What can you do? I mean, in FY23, your India EBITDA margins was about just under 18.5%. Would you want to guide your viewers, your investors, how this would be in 24 and beyond?
While we don't guide on margins, but I can explain how we're thinking about it. So we have not passed on the complete pressure of inflation onto prices. We've taken one of the lowest price increases, I think, in the market. The reason being that we believe that we have to walk an extra mile to keep our services affordable for our patients. So, which means that there is a huge inflation burden that we've taken on our P&L. We very, very strongly believe that we have enough headspace in our operations to be able to cover up for that, which we have not passed on price, the inflation. But it will take some time. The salary increase hits you on 1st of April, but you will take some time to neutralize it. So we may see slight dilution of the margins in the initial quarters, but we will come back. But I don't think we are aspiring for a significant margin expansion, because we believe that even we will deliver efficiencies, but we will also pass on efficiencies to our patients on a continued basis.
Okay, we are running out of time, so I just two, three very quick questions, if you can answer them for me. The promoter currently has about 64% stake. There is no intention to sell stake anytime in the future?
Not at the moment.
Okay, got that. The other thing also, the cash on the books is 650 crores, and you were talking about how you will look to deploy it at some point in time. Will your deployment of this cash largely be organic, or any inorganic moves in 2023 lined up as well?
Like I said, we will be cautious. If there is a meaningful inorganic, we are not averse to it, but it has to make sense to us and to our patients. So we will be open to inorganic, but at the moment we are envisaging a significant organic deployment of the cash.
Which have happened recently, which I'm sure you guys have been watching. Are they quote unquote reasonable, Sandhya, or too expensive?
Pardon me, I missed your question.
No, all the deals which have happened recently in the space, have they happened at sort of levels where you're comfortable with, or they're too expensive? Is the market in the deal space too hot here right now? So valuations, of course, are high.
It is hot, we would say. It is hot. That would be our view.
All right, Sandhya, thanks very much. Good speaking with you, and keep doing the good work. Thank you very much for joining us here on CNBC-TV18. We'll take a quick break here with markets, which, by the way, are up about down 25 points, nothing at all. I mean, we're basically where we started at 9:15. 18,730 is where the index is now trading. And we are back with the management of Surabhi Upadhyay Small Finance Bank to discuss their business outlook. A little later, after, we'll also have Rahul Bhasin, managing partner at Bearing Private Equity, to discuss what else but the deal space, blocks after blocks, and the market looking very good. So this is a market for M&A. Stay tuned. That conversation coming up.